Welcome again to this new event organized by the Global Supply Chain Council. My name is Max Henry. I'm going to be your host and the moderator for the Q&A on this hot topic, as many of you are aware and fully informed on the topic of tariff. The tariff saga has been going on for a few months now, and I know that it's a difficult topic for most of you who are following this. So we wanted again today to give you an update of what's happening. And we brought again our favorite experts to share again a presentation to give you the full update of what's happening with the tariff, what to expect, and also take questions from you, because I'm sure a lot of you are still very confused and very uncertain about what they might do in terms of manufacturing or sourcing in the coming months. So very pleased again to have you all joining from different parts of Asia. We also have people from the Middle East and Europe joining this discussion. As some of you know, I want to remind you that we want to make this session very interactive. So we will have a very quick presentation around 20-25 minutes, and then we will then take all your questions. And so if you have any question, you can go ahead and click on the question mark button located at the bottom of the screen. You can ask and type your questions at any time during the PPT, and then I will be then looking at them, and we'll take all those questions after the PPT until the end of the event. This discussion is just going to be 55 minutes, so we will be done at least a few minutes before the end of the hour. So again, by 5 p.m., before 5 p.m. Hong Kong, Singapore, the event will be over. So I'm very pleased again to have today Tiffany Chong and Xiaofeng Xu joining us, and I'm going to let them again introduce themselves and give you the full update with their presentation. So welcome, guys, and you can go ahead and share your screen now.
Can I see my screen next?
Yeah, we can see it. Not full screen yet. Okay. If you can go full screen. Thank you. Yes, all good. Yeah, go ahead. Yeah.
Yeah, hello everyone. Good afternoon and good morning. So as Max mentioned, we are from Sandler, Travis, and Rosenberg. So today our topic is about managing tariff. I will share the updates, some insights, and then Tiffany, my colleague, will share about some actionable solutions that many companies, they are either has already taken the actions or they are thinking about what possible solutions. So a quick introduction of Sandler, Travis, and Rosenberg. Actually, we are the largest international trade law firm in the US. So we are dedicated to international trade and customs. So we are not a very general law firm, but we have a lot of about 50 trade lawyers in the US. Over US, we have 10 offices there. And then our responsibility is to assist US importers, exporters to get clarity on tariff, export control, and many other international trade topics. We also have office in Hong Kong and Guangzhou, China. So we also have the Asia-based companies for their occurs in Asia or in the US. This is the second time we have the webinar with GSCC. The first time is in March 12th. I hope some of you joined the first session, because at that time, a lot of things is not clear, and the tariff is not that high. So many companies just stay and watch. But now we know that the tariff can go up to 145%. So it's time for everyone to rethink about the strategy in global trade. So I have my colleague Tiffany Chong, who is a senior director in our Hong Kong office. Tiffany has spent more than 10 years in ST&R for advisory to Asia-based colleagues in terms of the US duty, export control, and all stuffs. I'm Xiaofeng. I have been in this firm for about 1 year. So I help Tiffany and also help my clients in US, China for country of origin, tariff, the most important two topics recently, and also e-commerce and the free trade agreement. Okay, so today we will talk about tariff updates, including China tariffs, trade deals, reciprocal tariff, 232 tariff, and more than tariff. So I will take care of the first part. The second part is about some mitigation strategies for business to consider, such as production shift. You may probably hear that companies that shift production from China to Southeast Asia and all over the world, and some for sale valuation, which is an effective tool to reduce U.S. tariff burden and some of the decision-making framework. Okay, I think the most important update today is about the China tariff overview. So perhaps you have here a lot of different terms, different tariff, different numbers in the past several weeks. Now I want to give everyone an overview about the China tariff. So at the beginning, which is the first term of President Trump, there is a 301 tariff that is back in 2018, 2019. And then in Biden's term, most tariff continue, and there are some increase in tariff rates of certain products, such as batteries and electric vehicles. In the second term of Trump, from February 4th, there is 10% China IEEPA tariff. And then in March 4th, the 10% tariff increased to 20%. And then in March 12th, that is the Section 232 tariff on steel and aluminum stuff. That is 25% regardless of country of origin. No matter they come from China or Canada or whatever, there is a 25% tariff on steel and aluminum. And then on April 2nd, that is quite important update from the US, because US, they introduced the reciprocal tariff. For China, the tariff rate is 34%. For the rest of the world, it is either 10% or 11% to 50%. And now the total tariff rate for China becomes 54%. And then suddenly China announced the retaliatory tariff in terms of the US. And then US, they increased the tariff again for China. The first increase was in April 9th, and then the China tariff goes to 104%. The second increase is in April 10th, and the China total tariff goes to 145%. I think 145 is the number you have been hearing for a long while. And then in May 14th, there is a negotiation between China and the US in Switzerland. And now the China total rate goes down to 30%. Okay, let's talk about the Geneva trade deal first. So China and the US, they reached certain agreements. So for all the additional tariff after April 2nd will be reduced. For the US, they reduced from 125% to 10%. For China, they also reduced from 125% to 10%. So the tariff reduction will last for about 90 days or until August 12th. So I think there will be another round of negotiation, maybe happening right now or early June, somewhere in the world between China and the US. And there are a lot of other tariffs to be discussed, which is 20% fentanyl tariff. That is the primary discussion, and also 301 duty and Section 232 duty may be also included in the discussion. So for the new 10% tariff, the effective date was May 14th. But just yesterday or the day before yesterday, US released the formal federal register for the reduced tariff. But actually, they have been in place for about 10 days already. Another trade deal is UK trade deal. So for UK, there will be still 10% tariff. There's nothing changed on that. But for a lot of other tariff for UK origin products, such as autos, will be reduced. So basically, there will be 100K vehicles at 10% duty for UK autos. So that will cover current UK exports to the US. For everything after this quota, it will be 25%, same as all the other countries. And UK, they will also grant some tariff quota for US products. And there is no update on the steel and aluminum tariff right now, but they might announce more details in the future. And it is also reported that for all the existing investigations, like a pharmaceutical tariff, UK may receive a reduced duty rate. Okay, let's go back to this reciprocal tariff. So now, actually, for all the countries, the tariff rate is 10%. including China, UK, and all the other countries. Except China, the 90-day will keep until August 12th. For rest of the world, the 10% duty will be there until early July, July 10th or July 5th. Depends on how US calculate the 90 days. I think the business, they are quite concerned that after this 90-day period, whether their tariff rate will go up to the original rate. For example, whether Vietnam will be subject to 46% duty rate is a question at this moment. There's no clear guidance from US whether they will increase the tariff after 90 days. Someone says yes, someone says no. So I suggest everyone to keep an eye on that. Another important update is about the tariff stacking. So because one product, they may be subject to a lot of additional tariff at the same time. US, they publish certain rules to give some clarity. Again, there are a lot of uncertainty, a lot of things are not fully clarified, but there is certain clarity now. For example, if a product is subject to auto or auto pass tariff, they will not be subject to IEEPA tariff or steel and aluminum tariff. So you can reach out to us at any time by email. We can give you clear guideline or details information in this stacking tariff. You might hear that is a lot of 232 tariff investigation from the US. So last time we had this presentation on March 12th, there's only lumber and the copper investigation. And now you can see the 232 investigation cover semiconductor, critical minerals, rare earths, pharmaceutical, middle and heavy trucks, and the commercial aircraft, engines and parts. Besides the auto tariff for the tariff for auto and auto parts has already been in place for about 1 month already. So you can expect more and more tariff will come. Even Trump paused the reciprocal tariff 10% to all the countries, but there will be 232 tariff, likely 232 tariff for the product listed here. More and more will come. Number one is seafood. So there will be investigation in seafood. So Trump say he will support American seafood production and consumption, and likely that will be a 301 investigation, but there is no details yet. Another one is about the oil. So certain countries, if they import oil from Iran, they may be subject to additional tariff or 100% tariff based on Trump's social media. And there is a 301 decision on China shipbuilding. So you might hear that there will be a huge port charge for vessels built by China in the US port, up to $1.5 million, I hear. And there is also tariff on containers made in China. China built about 90% or even 95% of the containers globally. So that will be high tariff on that. And then Trump also said he will propose 100% tariff on imported movies into the US. I will not go to the details of each type of tariff, so you may look at the recap or the slides later on. So I want to highlight that besides tariff, there is also export control, which is more troublesome compared to tariff. Because tariff meaning that you pay extra money, you can still get the product. Export control meaning that if you want to buy something, you cannot without a proper license. So China controls the export of many critical materials and the rare earths, which is the most recent one. So in general, the Chinese exporters, they need to apply export license from China Ministry of Commerce to export controlled minerals. But a lot of companies, especially US companies, they have difficulty to obtain the license. So some companies, they try to buy critical minerals from other countries, but China controls about 90% of all the refinery of those critical minerals. So the US companies or even the European companies need to think about the supply chain or to cooperate with their supplier to obtain this export license from China. And again, US, just 1 or 2 days ago, US announced a new export control rule on the AI chips. So I have here that the China government they are not really happy for this new AI rule, and Ministry of Foreign Affairs in China and also Ministry of Commerce, they have very strong voice to opposite the new rule, and that might impact the trade negotiation between China and the US. For the mitigation strategy, I will pass to my colleague Tiffany Chung for a presentation. Yeah, Tiffany.
Okay, hello, this is Tiffany. So I think you heard a lot about the tariff, and then so we have seen a lot of company that they plan to move production in the last few months. And then so if you plan to move, I think people heard about how US Customs determine the origin, they based on the substantial transformation. And what does that mean by substantial transformation? Is of course it's quite simple concept. It really means that whether you have the new character or use or new name of the goods. So you can see next slide. Yeah, you can see that when custom really look at the substantial transformation, they just want to prove that whether your manufacturing process will have the new name, character, or use. It looks simple, but it's not. It's never easy because when custom look at that, they look at the totality of the circumstances and they determine, case by case, like what they think is the conferring origin operation. So oftentimes right now is a lot of company that they come to us, they would ask us, okay, they already plan to move. They plan to move to, let's say, Southeast Asia. And then so they understand all the things that I'm showing on my slide, a new name, new character, or new use, but they don't know what they should do to determine so that they could make sure that custom would agree that product is not China origin anymore. So you can see in the next two slides that we could look at some factors that custom would think this is substantial transformation. It's so easy as well that, okay, whether you have make the components having a physical change and what time that you get involved and then how complex the manufacturing process is. But the point that we encounter here right now with a lot of manufacturers is that, yeah, they might be moving the production to Southeast Asia, but the point is a lot of component is still coming from China. So you can see that when the last point is, okay, the value added to the product. So even though if you may move the production to Southeast Asia country, and then but if you have most of your components coming from China, then I think the concern is does US custom really would agree that the country of origin is not China. So this is why a lot of manufacturing right now, they want to be cautious. They know that they want to move, but they want to be cautious that the move is really fulfilling the substantial transformation requirements of US custom. And then so what we need to look at is really case by case that custom will think, okay, what is really not substantial transformation. So you can see that this is a lot of example, but what is mean here is this simple assembly operation is really not substantial transformation. So when we do the origin review, we actually need to work with a lot of factory that they need to break out the production process to help us understand what is the essential character of the goods. And then we will determine what is the most important part, either the component or either the manufacturing process that they should move out from China. So the difficult part is when we look at the product. So first of all, we need to determine whether the essential character of the finished product. And then, so for example, when we look at the product, we think that PCBA is the most important thing, then we move outside from China, right? And then the next part is like when custom also look at that proper, they will also look at where the component of the PCBA from, and then what kind of changes that you make on the SMC process or the PCBA. So you can see in the next slide that this is next one. Next one. Sorry. Yeah, and then so in the next slide, you can see that this is what I was trying to explain to everyone is that when custom really look at the substantial transformation, they need to make sure that, okay, even though you have all the component might be from China, but then you need to prove that your process is complex enough, and then you really change the the process, and you really change the physical goods. So, for example, you can see that chip putting on the PCBA board, right? And then so it will become functional. So these are the things that customers would usually want to look at when they think that this is a substantial transformation. PCBA may be easy to understand, but when we're doing a lot of review right now, it's not just the electronic part. It could be like, other things like a toothbrush or like a mop. So a lot of things that people want to do the origin review. So that means that there's no definite formula or definitely answer what customer would think that is a substantial transformation operation, and so we will have to look at that like case by case. Yeah. And then so this is just more like I think a summary that what customer think is substantial transformation. So you can see that it's not one single factor that we need to look at. So we need to look at the assembly step and the cost, and then what kind of skill and technology that require. And a lot of people also talk about the software, because sometimes a lot of the electronic product, without the software you may not be able to use the product. So those are the things that we will have to consider when we do the substantial transformation review. And then so of course, we all understand that it's never easy to move the production, because even if you move the production, it's not just you move the production. It's sometimes your supplier may also need to move the production as well, so that you have all your supply chain without the China component, without your China origin. So sometimes we come across is like company want to use Versa in the meantime to reduce their duty exposure. So because right now I think Xiaofeng talked about like reciprocal tariff and this and that, right? The point is when the tariff rate go up so high, people want to see if they could have a lower value to report to custom. So this is why it come across first sale. So first sale is a concept that allow people to use the factory price to be the declared value in the US. So here is just a simple example that you can see that, when there's a two-tier sales, and next slide, please. And then so you can see that, when a factory sell to middleman and the middleman sell to US importer, usually if the FOB price is $10, and then this is where the US importer is paying on the duty right now, they're using $10 times, let's say the MFN rate, the 301, or all the additional tariff, and then that is how they calculate how much they need to pay. But the concept of doing first sale is if we're able to use $8 to get the declared value, so you can see that the duty rate is still the same. You have to pay the MFN rate, you need to pay for the 301 and the IEPA tariff, but then you will save tons of money because of doing first sale, because you can use a lower value to do all this calculation. So this is more a simple way than doing the supply chain movement, because when you move, it may take months of planning that you need to move your production with your supply chain. But by doing first sale, you could save money as soon as you finish the first sale implementation. So this is why we have seen a lot of importer right now is trying to use first sale to save duties in the meantime.
Yeah, thank you, Tiffany. Yeah, just make the ends of our presentation, so you can always contact to us from the email, or there is a WeChat account of Sandler, Travis, and Rosenberg China office. The WeChat is in Chinese, unfortunately. If you can read Chinese, you can subscribe to our WeChat account to see our latest analysis and all the tariff updates from the US. So we will use the rest of time for Q&A, and I will pass the Max to you for the moderating Q&A session. Thank you.
Thanks a lot again for this presentation. Good update from Tiffany and Xiaofeng on the tariff. Again, if you have any questions for either Tiffany or Xiaofeng, feel free to ask now. you can make use, click on the question mark button located at the bottom of the screen, and then we will take those questions as they come. We already have quite a number of questions on the Q&A. We're going to take them one by one, but we still have around half an hour before we wrap up, so we want to spend more time on your questions. So let's start with those questions, and I'm going to go to spotlight them on screen. So maybe we'll start with that first question here. It's a question from Sharon. So she's asking, so is the 10% China tariff final, or will it go back to 125% after August?
Yeah, thanks for this question. I think that is also a lot of people they want to know. Actually, from the language in the announcement, so after 90 days, the tariff will go back to 34%, from 10% to 34% instead of 125%. So that is the interpretation from the language of the announcement and the executive order from the US. But everything can be changed after 90 days. But now you can imagine that it will not go back to 125%. It will go back to 34% plus all other additional tariffs. Yeah.
Okay, so minimum 34% that people can expect, or more, depending on the negotiation, right?
Or less, depends on the negotiation.
Or less, yeah. Okay. All right, so let's move on to the next question. This is a question from Daniel. All right, so I think this is a two-part question. Is the basis for the 90-day expiration on the Geneva trade deal, 30% US tariff on China goods, based on the water setting date or based on physically arrived US port date? Let's answer that first question first.
Yeah, we just discussed this with Max before this call. There is no clear guideline on this. We don't know. No one knows because the official announcement, they didn't mention this part. So if possible, try to get the goods into the US, make the customer declaration before the deadline. Or I think maybe 1 week or 2 weeks prior to the deadline, there will be more guidance from US CBP or some other authority in the US. So that is the best estimation. So no one knows the answer right now.
Okay. Question number 2 is, will items already in the US FTZ, free trade zone, be subject to a tariff at time of entry to a US free trade zone or not?
So I think the idea of the free trade zone is if you store the goods there without entering into US, right? And then so the answer is, I think when you pay the tariff is the time that when you enter into US. So I think it really depends like what time that you make the entry. And then so let's say if you, as Xiaofeng said, if you're within that 90 days, and then you will still subject to a lower tariff. But if by the end of the 90 day or like after that, then you may be subject to higher duties.
Yes, from the language or the legal text of our announcement, FTZ is not a place for you to reduce customs duty or to avoid customs duty. So basically, customs, I think CBP changed their FAQ. In their website, you might try to search CBP FAQ. So they highlight that FTZ is not the place for you to avoid customs duty. So basically, if your goods are entered the free trade zone, you need to claim the duty rate at the time the goods enter the free trade zone with a foreign privilege. So that is the idea of the free trade zone.
Okay, all right. I see that, Daniel, you're raising your hand. I'm not sure whether you want to speak, so maybe I'll get you here. Daniel, I'm giving you access to, so if you want to join and speak and react to this, feel free to accept it, and then we'll see. Okay, maybe you need some time. So let's move on to the next question, and I'm trying to get it. So next question is, trying to show it to you. Hold on, I've got a technical issue now, so let me switch on my VPN. Yeah, Daniel, I know you're raising your hand, so you have access now. You can actually speak. Okay, let me click on this. Okay, next question from Yanisa. This is we don't hear a lot on what Vietnam is trying to negotiate. Is there any update on this?
I think several days ago, the US said they don't have time to negotiate with 150 plus countries. So they will inform each country their individual rates in the next 2 to 3 weeks. So you can stay tuned on that. I think Vietnam is trying to negotiate with US. If I remember correctly, there is a phone call between Trump and the leader of the Vietnam in terms of tariff and everything, but there is no official announcement for the Vietnam deal. I think after April 2nd, the Vietnam reciprocal tariff is 46%, which is very high compared to the other countries in Southeast Asia. Make the business in Vietnam very panic about what's going to do in the future, but then it's going down to 10%. So that's the current situation. But I think you need to wait for another 2 to 3 weeks for the updates from Vietnam negotiation. Yeah.
Okay, all right, good. Daniel, you're here. If you want, I know you're trying to raise your hand, so now you have access. You can speak. You can just unmute yourself if you want, and react to what Xiaofeng and Tiffany say. If you want to do it, otherwise we can move on.
Sure. You can hear me?
Yeah, we can hear you. Yeah, go ahead. Yeah.
I just wanted to acknowledge what Xiaofeng said. I think is correct, that when Trump put in these higher tariffs against China, he was very specific regarding the U.S. free trade zones not being an escape mechanism, that you cannot enter the FTZ during this time of uncertainty and think that you can escape when the tariffs lower. He put a very unusual precedent-setting exception in, because normally FTCs would be the exception. It's extraterritorial. It's not part of the United States territory when you establish an FTZ. But Trump, legally or illegally, we're not sure, tried to preempt that by saying that would not be applicable. So the advice I've been hearing is if you want to get your goods out of China, send it to an FTZ in Mexico or Canada or a different country, and then enter the US, and that would be applicable. That's just my interpretation. Thank you, Xiaofeng. I think what you said was accurate. That's all I had to say. Thank you.
Yes, thank you, Daniel.
Yeah, because and I've seen that in some report that some importers were trying to stock up a lot of inventory in those FTZ and in those very large warehouses at the ports, at different ports of the US. But so they're basically taking risk, right? They could be impacted, right? It's not a safe option.
Exactly.
Yeah.
Okay. All right. Okay. So let's move on to the next question. Someone is asking, if we buy from Vietnam, but materials are from China, are we still hit with 301?
So I guess that is related to what I was explaining about the substantial transformation, because we understand that at the moment, a lot of material is still from China, right? So maybe the production moved to Vietnam, but you purchased the material from China, right? And then so that's why you will have to consider two parts. So first of all is the value of the materials that you purchase from China. Is that that particular overall value is very high enough that with the China VAT, that's first thing. And the second thing is actually more important is what you have done in Vietnam. So even though if you buy material from China with a high value, but you have to demonstrate that, all your process that is done in Vietnam, that will fulfill the substantial transformation of custom requirements, that you really change the material. So let's say like a simple one, like, you buy fabric, right, from China, and then you cut it and make it into apparel. So of course, even though the materials from China, custom would still agree that, this is a Vietnam origin, and then it's not subject to 301 or not subject to any China tariff.
Okay, good. Thank you very much. Let's move on to the next question. Can you share what counts again as substantial transformation again? Just changing packaging doesn't work, right?
Yes, because substantial transformation really means that really your production process changed the nature of the goods. So of course, if you're just really changing the packaging, right, it means that the product itself doesn't change. You really just, repackage the goods, right? And then so what substantial transformation really means is like you need to show that your manufacturing process really changed something to something. So it's essentially it's not the same one. So in my last example, for apparel item, it's simple to understand, right? From fabric to apparel, right? And then for electronic products, right? So you also need to make sure that, let's say I mentioned about the PCBA, right? So that probably just one part because every electronic product will have the PCBA, right? But then you will also need to consider that, if your goods, let's say, is a toothbrush, right? And then so what is the conferring operation of that toothbrush? And then you will have to move that essential part from China to elsewhere. So that's why there's no absolute answer. Because as I showed on the screen before, is what custom thing is really just new name, new character, or new use. It's just that simple. The answer that gave out, and but you need to prove yourself what process that really changed the materials to the finished product.
Yeah, just give you very simple example. So this is a plastic bottle cap. So if you import plastic pellet from China, in Vietnam, you do the injection molding to have this basic shape of the cap. Vietnam is the country of origin. But you import this one from China, you import the bottle from China, you put these two together in Vietnam. This is not considered a substantial transformation.
Okay, that's interesting. Thank you very much for the example, Xiaofeng. Okay, let's move on to the next question. And again, if you have any other question, feel free to ask now. We're still going to continue the Q&A until 5 minutes before the end of the hour. All right, someone is asking, how have the tariff affected your freight price to the US?
I think that the freight price will be impacted by tariff, of course. So you may saw from the news that just before the high China tariff became effective in April 9 or so, Apple, they get a lot of air freight. They book out the flights from China to the US, the capacity to ship iPhone from China to US to avoid the higher tariffs. So meaning that the freight price go up very high. And now, because the China additional tariff become 10%, so I hear that the container booking requests go up 300% compared to a week ago. Definitely the price will go high. It's just the demand and supply. The supply is kind of stable, or some vessel container lines, they can increase the number of vessels from China to US. But from China to US, the vessel need at least 2 to 3 weeks. It cannot happen in one day, not like air freight. So basically, the capacity is there, the supply is kind of stable, but the demand is quite high. Everyone want to book, everyone want to move in this 90-day period. So definitely the freight price will go higher and higher.
Okay, thank you very much. Let's move on to the next question. Question from Brian was asking, any update on the auto tariff? We're sourcing parts from Mexico and we are kind of stuck.
I think you can send us an email we can give you more idea on the auto tariff, because that is quite complex. That is like 10 different rules you need to look at the same time. In principle, if your auto parts are qualified for the US, Mexico, Canada free trade agreement, you don't need to pay any tariff in principle. But again, you may need to pay some tariff on the aluminum and the steel, depends on the product. And then if you are not qualified for that, you may be subject to the auto parts tariff, which is 25%. If you are paying 25% on auto parts, you don't need to pay 25% on steel and aluminum stuff. Again, it's quite interesting and quite complex. You can drop us an email so we can try to understand your situation and explain in detail for you.
Yeah, we'll leave your contact details after the event, and we'll also share that in our thank you email sent to you. So no worries, you'll get a contact from both Xiaofeng and Tiffany. All right, let's move on to the next question. Question from Shandan, who's asking, what would be the impact on textile imports coming in from East Asia to the US?
Well, I think it's more like just the same, like because as we see that a lot of textile product or apparel product is actually already moved from China to Southeast Asia. So it's not happening just now. It's been happening like a few years already. And then so I guess the impact is really like a lot of people they move from China to Southeast Asia because of the tariff, right? Because of the VO1 tariff or other concern. So I think the impact is right now, even though if you move, you might be subject to the reciprocal tariff. So I guess that's the immediate impact of for textile.
Okay, thank you. Let's move on to the next question. Okay, someone is saying, I understand that clients are wanting clarity on what to do regarding importing into US. Do you have clients that are considering other markets for the first time? Example, the EU.
Well, I guess okay. We have seen some like especially like Hong Kong or China. Usually the U.S. is the biggest market, the biggest client, and then so they rely on the U.S. market, and then so I think I have heard like people trying to diversify is they might try to develop client in the EU, and also maybe they will sell locally or like kind of within Asia, but the concern is more like it's not easy because the volume that US source usually is like bigger, and then it's not like EU or like the Asian market take the same volume as the US customer.
Okay, all right. Let's move on to the next question. Again, we still have 10 minutes, so if you have more questions, feel free to ask now. Okay, hold on. Let me spotlight the next one. Someone is asking, is there a list of what simple assembly customs will not accept?
They have some simple example, like for example, I think people ask about the packaging, right? And then so that's just, of course, is kind of not it's like simple assembly, and then so they will also mention about like the final assembly process, like putting parts together, but then there's again no definite answer of what simple assembly. You actually have to prove what you think is eligible and fulfill the requirements.
Okay, all right. Let's move on to the next question. How risky is it to rely on the first sale rule now? Audit chances up. So, what's your take on this?
Yeah, of course. I think we would think that the risk is going up because we have heard that even though without first sale, a lot of people trying to declare a lower value in the U.S. right, just because of the high tariff rate, and then so that actually means that custom will really look at the shipment to make sure that the valuation is correct, and then so the risk of doing first sale is that if you do first sale without any proper review, then it's yes that if you got picked from custom, and then if you cannot prove like why you report that manufacturing price, so custom will of course jump on you and then will ask you for a further audit or checking. But then if you use first sell in a proper way, that you review all the legal requirements and you fulfill that, I think it's still supportable. It's just that of course if you report a lower value, then custom would have a chance to review that. But if you do it right, right, and then I don't think it's too risky to do this.
Okay, good. Let's move on to the next question. Any suggestion for fast wins on duty savings without moving production?
Well, I think that's the questions that people always ask us, like, is there any duty saving opportunities? And then so it's really no good answer really because like a lot of people like we exhausted for a lot of different options, right? Because like when the tariff will be imposed on every countries, right? Moving the production, of course, may be subject to a lower tariff, but then you still have to pay tariff, right? So the only thing that people is really doing right now or the last choice is really on the valuation, because if you cannot move the origin and you cannot move or cannot change the tariff rate, the only thing that you might be able to do is on the valuation. So which means that for sale, like if you cannot change origin, cannot change, then the only thing is you try to report using the factory value.
Yeah, there's another thing I want to highlight, that if you conduct a very comprehensive substantial transformation analysis in the production in China, for example, you can try to source some of the critical components outside China to make this product made in China, but with a country of origin, a third country from US customs perspective. That is also some options that the company they are considering at this moment. Another thing is that you can try to review all the past US import entry summary. We have a dedicated team in the US to do that for a lot of large importers in the US. Even they believe that their broker is filing everything properly, but there is always a lot of opportunities to get duty savings for the past shipments or for future shipments, including classification, including whether you deduct your freight from the dutiful value when you calculate the duty, or whether two additional tariff, like 232 tariff on auto parts and the aluminum, you don't need to pay two tariff, but some broker, they might report two lines for you to pay. Those small tactics can also help you reduce the tariff burden or help you get some saving in the US.
But given the fact that things might change again in the coming weeks and months, what would be your advice now to people who are looking at this and still find it very confusing and overwhelming, with daily changes and everything? Are you advising your clients to kind of stay put for now and waiting until things clarify, or they need to dramatically change the way they operate? Because and we discussed that before the event, but tariff might go on, this kind of changing tariff might go on as long as Trump is around, right? So what would be your final advice to people listening?
Yeah, I think the advice is that you need to talk to more industry experts, to talk to more companies in the same industry as your company. So you need to learn what others are doing right now. Some industry, especially those in the so-called electric vehicles, all the suppliers to those US auto giants, a lot of that company, they already move production from China to the US or to Mexico. And some textile companies, they try to find factory in Southeast Asia for the US production. And a lot of companies, they are producing some electric appliance. They move production to Thailand and Vietnam. Those are our clients. So if all your competitors, they are moving production from China to Thailand, for example, you are not moving. Definitely, if the China tariff go high, you will lose order and your sales number will go down. And your competitor, they will do very well because they have the Thailand production. But if everyone of your industry, they stay in China, you can also choose stay in China because you are in the same baseline for the tariff.
Okay, we got 2 more questions, 5 more minutes to go. Question from Daniel again, which is a bit technical, but let's try to take this. Does this scenario make sense? Previously, factories sold FOB China $10 per unit, which includes their profit. If changed to CIF USA, and then China factory partner with US importer and split their final profit and offered a lower calculated FOB cost, say $7 per unit, will this be a legitimate way to reduce tariff basis?
Yeah, so I think we will need clarification. So first of all, right, like if the factory sold FOB to China at $10, right, so that is usually the value that calculate the duty in the US. And then so if let's say the Incoterm is CIF, right, and then so that, let's say if $10 means the CIF price, then of course the international transportation cost and insurance cost could be deducted from the enter value, right? So but I'm not 100% sure about how that is reduced it to $7. So if this 10 to 7, meaning that that is the international transportation and the insurance cost, so that is legitimate, as I said. But if that is about some other profit split, then we might need to really look at closely whether this is like a way to reduce the tariff.
Okay, all right. We'll try our best, Daniel. I know it's a bit more difficult, but thanks for the question. And again, you can talk to Tiffany or Xiaofeng for further explanation. Let's move on. We got one more question and then we can wrap up. So someone is asking, how risky is self-declaration versus CEO certificate if you are intending to do everything legitimately?
Yeah, I think this, for this question, I think you are referring to the non-preferential certificate of origin or COO. Because if there is a free trade agreement between the two countries, you need to follow the requirement in the free trade agreement. For the non-preferential certificate of origin or country of origin, for example, between China and the US, so if you import into the US, the country of origin will rely on the self-declaration. Because US, they use the substantial transformation rule to determine whether the product into US is considered as a country of origin China. But for China, it has its own country of origin rule to determine whether this product is considered as country of origin China at the time of export. So we often see the case is that China rule and US rule, they gave one single product different country of origin. And then the client is struggling whether they can mark, for example, made in China when it exports from China, and then mark, let's say, made in Thailand or country of origin Thailand when it enters US. So they may want to find a third jurisdiction, for example, Hong Kong. They declare made in China when it export China, and then move the goods in Hong Kong, and then they change the packaging saying country of origin Thailand or made in Thailand in Hong Kong, and then ship this from Hong Kong to the US. Or they choose not to declare any country of origin in the outside packaging of the product, and then they find a bonded warehouse, whatever, to put made in Thailand or country of origin Thailand before it enter US, because in the US customs rules, you need to clearly state the country of origin marking in the packaging. So that is quite challenging because different countries, they have different rules of the country of origin. So self-declaration or country of origin certificate, I cannot say that any of them is a better option, but you need to look at the rules of the country you are doing business with and then follow the rules in that country.
Okay, all right. Thank you. And then just to, Daniel is also adding, just on that previous question, profit margin was removed from tariff basis. Tiffany, any additional comment?
Yep. So usually when U.S. Custom look at the value, they're looking at what they call transaction value. So it really depends the profit. If the U.S. importer is remitting, the profit still to the factory, right? Then that profit cannot be deducted. So the only thing is, if you, like, let's say in the previous example, if $7 is really what the U.S. importer paid to the factory, then that is the transaction value to be declared. So it really depends how much that the importer legitimately paid to the manufacturer, then that will be the value to be declared.
Okay. All right. With that, I want to thank both of you for being with us today for this update on tariff. Thank you very much, Tiffany and Xiaofeng, for being with us, sharing your insight. I also want to thank the audience for asking all those questions. Some of them were a bit more technical, but I think we managed. If you missed part of the presentation at the beginning, no worries. A replay will be made available tomorrow. Give us 24 hours and you will be able to rewatch the presentation and again continue the discussion. If you have additional questions, you can also make use of chain.net. We have, as you know, a discussion group where we take from time to time some questions from our members as well. We will try as much as we can to give you updated on what's happening. Obviously, August is going to be the next big deadline for a lot of people, and we'll try to organize something around that time to give you an update. So again, thank you very much for watching, for being with us today, and we look forward to see you at our next event. Thanks. Thank you, guys. Thank you, Tiffany. Thank you, Xiaofeng. See you next time.